All right, cool. We're good to go. Today we want to keep talking about investing and partnering today. You can obviously make a living selling real estate, but you can make a fortune investing in it. And it's something we want to continue to talk about and help our agents with their wealth building endeavors throughout their career and lives. And it's something that you guys definitely need to think about when you got the ball kind of rolling and train moving down the tracks. Uncle Tim, you want to kick it off here for us and give us some of your thoughts?
Yeah, I thought it was an interesting call last week with Kane Schmeltz from Kane Mortgage that enabled people to be able to buy properties without having to prove they have the income to afford it. So I thought that was kind of neat having those programs out there. And I thought maybe we could continue on talking about investing in whether or not that's going to be part of your 2026 goal or not. Um, what I'd like to talk about first, Aaron, if you want to unmute yourself, is when it comes to investing, there's a couple different ways you can do it. Number one, you can do it individually, where you could just apply for the loan and put the property in your name, or you could apply for and form an LLC. So, Aaron, would you want to tell us what the process is, how you normally create these LLCs, who you sub them out to, what the actual cost is to do it?
Um, yeah, so we've used a couple different people. This attorney, Jana Capecchi, she does them. Um, Usually it's pretty simple. It's all done through the state, and most of it's done online now. You have to pay the filing fees, and she'll create the operating agreement. The fee used to be around $500. It's probably gone up in the last couple of years as everything else has. But yeah, so that way she forms the LLC, does it online, gets the EIN, does it with revenue, and does your operating agreement, and then you're all set. Um, there is annual reporting that you have to do now too with those. Our accountant's been doing it, so that all depends, but it's a pretty easy process.
And what did you say the cost was? You said about 500?
It used to be about 500. That was years ago, so I don't know if it's gone up, but there's plenty of it, different attorneys that prepare them. I would say anywhere between 500 and $1,000, you can get it done.
Okay.
Yeah. JB has also helped us. I kind of help him as well with the online part of it. So if anybody's interested, we can always ask him as well.
Okay. Tom Chalednik, if you could unmute yourself, I'd like to pick your brain a little bit this morning. I know you've invested for years now and own a good number of properties. What was the reason, or do you own some of these properties on your own, or are they all with you and Doug together? And why did you decide to partner with somebody with regards to investing?
Oh, good question. I have a partnership, but I also own on my own. Why did I partner? Honestly, when we started out, we didn't have much money. So, you try to combine your finances, create a partnership. We created a partnership 20 some years ago and expanded out, done some LLCs with those as we expanded. You know, when you get to a point where you got one or two, under 10, it's pretty easy to manage by yourself. But when you got more than that, then you go away. It's good to have a partner that you can cover you when you're gone. So as we've gotten older now, we've split off a little bit more and doing more on our own because we'll probably end up breaking that up and splitting everything up. But bottom line, it was just a money thing. Didn't have a lot of capital. Figured out ways to keep it going and put some money in and just keep them floating and having somewhere to support you and back you up when you weren't around, or to help you rehab them and stuff. When we started out, we rehabbed a lot and did a lot on our own. As we've gotten older now, we will get other people to do it for us, but that's pretty much how it worked. And did a lot of try to find owner financing. Again, didn't have a lot of capital to start with, or back then you could do 80/20 loans, get the seller to hold 20% and the bank would finance you 80. So you get 100% financing and just had to make sure the numbers covered. That was the big thing is making sure your numbers worked. So you didn't get
Right.
it. It was risky, but it was worth the risk for us. Thank God. So
Yeah. So again, like you said, partnerships spread the risk, and you're not carrying all the financial responsibility on your own. And teaming up with somebody lets you pool your resources together, like you said, when you go away and things like that. Did you guys, when you started out, were you putting them in your individual name or were you putting them in an LLC? Because I know my father and I, when we started out, we were just putting them in our individual name, and then the banks kind of forced us to start putting them into a partner. It's not actually an LLC for us, but it's a partnership agreement that we had between the two of us.
well,
So
we started, we had a partnership agreement. LLCs weren't really that big, I don't think, back then. So, we had the partnership agreement, and then we heard about the LLC, so we created a couple LLCs to try to, it was told to us that, hey, it gives you a layer of protection. If someone gets hurt, they're suing the LLC rather than coming to you individually. So we do have a couple LLCs, and put some properties in there. The thing though, like the guy even said last week, we thought, well, we do it in an LLC, we can keep our money in the LLC, and they can't come after us uh, for stuff. But we still, when you buy with us, my experience with all the loans we have, even though we have them in an LLC or the partnership, we are still individually, we sign off individually for it. We're still responsible. So even though it's in the LLC, we are still signing off individually. They can't, so they can still come after you financially for that stuff. That's my understanding. So I know a lot of people do the LLCs. Last year we talked to our attorney about the LLCs. We says, is it really worth it? And he pretty much said, no, you really don't need to do it because he said you're waste. He didn't say you're wasting your money. He said it's getting to be expensive to do, and we don't have hundreds of units. Which he said if we got up into that point, he might consider doing more of it. But I see a lot of people with LLCs. They buy a property and they put the address, 6375 Mercury Drive, LLC. They go buy their next one, 125 Main Street, put it in LLC. I'm sure you guys see that stuff all the time. So I guess it works for some people, but that just, how we did it. We were still with the LLC, you are still obligated to sign off on the notes, for the mortgages.
right. So the bank is still holding you responsible
Yes,
in the
sir.
building, but the purpose, I think, also of the LLC is to shield you from protection of a lawsuit from a
Yes.
tenant or somebody getting hurt on the
Yep.
property itself. So, um, yeah, it's just like I have that same experience, Tom, when I buy a car. If I buy a car in the company name, they're not only making me sign for the company, they're making me sign personally, just because small businesses, they don't believe in having company cars that with the company backing the loan. So I have that same problem with a car loan. Yeah.
Mhm.
Kong, you own quite a few properties now. Have you bought those privately or have you bought those in an LLC? What have you decided to do?
Yeah, the last few I did buy under an LLC, but piggybacking what Tom said, I spoke with an attorney and an accountant and the insurance person, and they said make sure you have a good umbrella policy. They kind of said what Tom said, um, but they said just cover yourself with a good umbrella policy.
And umbrella policies these days are pretty inexpensive. So
Yes.
you can get several $1 million worth of coverage to protect you for very little money. So,
Yeah, especially once you get into the double digits of rentals, you know, that's probably a good idea for less than $600 for an entire year. You can get yourself a very good policy.
hmm yeah.
So
So anybody want to tell us why is it to our advantage to start looking for these rental properties? What is our advantage with that to look? Anybody want to comment on that?
that's what do you mean, Tim, as far
Well,
as
for instance, years ago when my dad and I started getting into the rental property business, he said basically we have the first look at some of these deals. So a lot of times when you have the first look at these deals, you'll find those opportunities are there if you're actually looking for it first as a possible rental and second as a listing or a listing to sell. So a lot of the good deals that you'll find, and probably Tom, you would expand on that too, were a lot of the properties that you and Doug bought over the years, were they listed or were they deals you stumbled across and bought before they actually hit the open market?
It was about 50-50. You know, some of them were places like where I was going to list it.
Right.
And this is a single family home, for instance, and it was in bad shape. And I told the seller, I said, here's, we'll put it on the market, and if it doesn't sell, I said, I'd buy it from you for this point, a certain number. And some of them just said, hey, I'm not worried about putting it on the market. It's just bad shape. I'll take that number. So, I always, when I came across a client like that, I always gave them, I never got a deal, I guess. I felt, I wanted to treat them right and be fair. It's not right to take advantage like see some people do. So they always got fair numbers. Uh, but it's been about 50-50. Some have been listed. They're sitting on the market for a long time, and then we pick them up. The key, and I'd imagine anything, whether you're in the stock market or buying rentals, the key or flipping, the key is in the purchase. You got to get the right number. You know, unless you have a lot of money to throw at it to make it work, you got to make sure you can't buy one just to buy one. You got to make sure the numbers are going to work, or it's going to struggle. That's my experience with it,
Yeah.
and when I
Yeah.
got into the business, and it's stuck with me a long time. A guy who was an old time investor and realtor said, "You can make money in real estate selling. You can make a living, but you create wealth by owning it. You got to own it." And that's just stuck with me. And I try to pass that along to everyone who I talk to about real estate.
Right.
The
Yep.
wealth comes from owning it.
Yep. I agree with you. And like I said, when you're looking for these opportunities, my dad and I owned one and still own it to this day, now with my mom, but the in Cedar Cliff, and it's a rancher, and the we were sitting in there on the appointment, and the seller was like, I really don't want to have to, I have dogs. I really don't want to have to go through showing this house. You could just see they were frustrated about putting it on the market and the inconveniences of showing it and that type of thing. And it was just one of those situations where we gave them a fair price for the house, but it was worth it to them to discount it, not go through the inconvenience while they were building of knowing that they had their house sold, they could move out when they needed to, and it wasn't worth trying to market it and worry about a temporary move and that kind of stuff. So sometimes finding those deals while you're on a listing appointment, they just show up. They just show up. And when they do, you have to take advantage of it. And then bringing that advantage to the meeting today is that if you can't do it on your own, partner with somebody to do it. Spread the risk, use the resources, and spread it so that you can walk in and not lose those advantages. I bought that particular house, I think, for $140,000. maybe back around 2000, somewhere in there, 2003. That particular home is worth about $350,000 today. It's more than doubled because we took the risk. And we took the risk because we heard from the sellers they didn't want the inconvenience. They just wanted to get it sold. They were happy to sell it to us, and we did it. And Kong, have you run I know you've bought quite a few over the last couple of years. How did you stumble across some of these deals?
Just like selling real estate, Tim, talking to people. I the best one I bought recently was the Hershey property, and stumbled across that from a past client that wanted to buy it, and they just wanted me to be a transaction licensee on the deal. So they had already agreed on everything, and all I had to do was just write up an agreement for them. And then the buyer backed out, and I said to the seller, "Hey, if you give them the deposit money back, I will insert myself back into the deal, same numbers, whatever, and I can actually even settle faster because I didn't have to check with zoning to do any rebuild on this property in Hershey." So they sold it to me. And at the time, I was like, oh my gosh, I'm buying it on emotion because, Irma and I always wanted to move to Hershey. It's our retirement house. I think I'm overpaying for this. The rent barely covers the mortgage. And this was back in 2021, March. And by 2022, the place was worth like 80 grand more than what I paid. And just the other day, I got a valuation on it and it's worth like 165 grand more than what I paid 4 years ago already. So, and the rent now, I give it to Brent and Alyssa to rent, and that thing is paying more than the mortgage because the rates were so low then. So sometimes you have to take the risk and just say, hey, I can cover it, but real estate's going to go up in this area. Maybe it's not, the 5-10% every year, but at least it's going up 1 to 2%. And in 10 years, you'll look back and be like, I'm glad I bought it. So if you can at least buy it, get the rent covered or the mortgage covered through the rent, you have to chip in a few bucks here and there, that's fine. But know that it's going to go up, especially if it's in an area that appreciates.
Right. So tell us how you stumbled across the one in Enola.
That's from Mr. Chelednik, talking to him.
Okay.
Yeah, just
That was
talking
what the
to people.
Yeah.
He said, "Hey,
Um,
Kong, I'm getting this listing," and I saw it, and I was like, "Man, that looks really cute," And then in Enola, it had an apartment above the garage, and you know how I love garages. So I was like, "Yeah, I've never bought a multifamily before, but I can do this because they're not attached to one another, so the tenants are not on top of one another." And I wrote an offer, and Tom presented to the seller, and he took it. It was very hassle-free. So,
Yep.
yeah.
Okay, good. So Brooks, when you bought your townhouse that you have down in Fairview Township, how did you stumble across that deal?
I've just always kind of liked that neighborhood and you know, needed something as a starting point. That was the first one I ever bought. And I had been looking at it. It was on the market. This was, well before 2020. And um, it'd been on the market a little while. It was an end unit, and it was one that didn't have great interior photos and stuff that, otherwise might have caused it to sell earlier. And it put me in a pretty good negotiation standpoint. And it was just on the market through the MLS.
Okay. And if you could expand a little bit and tell the group, how did we come across the VRBO and what kind of research did we do and what were our initial thoughts about this investment and how did it turn out for us? Because again, when you're talking to other agents and you're looking at this stuff as an investment first versus making a commission off of it, Explain to everybody how that deal came about and where we stand today with that deal.
Yeah, so that was kind of similar to Kong and Tom in that I was talking to Brad Cleland and he was telling me about this upcoming listing he had, and it was a very unconventional property. It was a husband and wife. Their family had moved out and it was in downtown Mechanicsburg, and they decided they were going to try their hand at Airbnb and VRBO, and it became a pretty successful, lucrative business for them, and they wanted to get out of it. And he started running through the numbers, and I'm like, this thing, if it's grossing for real this amount of money, you know, I want the first shot at this thing, and I want to try to make you an offer. So he ended up getting uh, the Schedule E's, tax returns from them, and provided them to us. And I took a look at them, looked at their expenses, and pulled up, the property on both VRBO and Airbnb and checked everything out. And it definitely was a very unique property. And I took a look at basically the competition, and it being so unique in that Mechanicsburg Borough is one of the very few townships, municipalities, and boroughs in the area that allow short-term rentals. So there's not a whole heck of a lot of competition. And this house is a legitimate five-bedroom house, but they also have a sixth queen bed in the basement. So it's a big home that lends itself to a large amount of people. And it's very attractive to a wide range of guests that stay there. Throughout the summer, it's booked week after week from Memorial Day to Labor Day, and it's a lot of family vacations, people visiting Gettysburg, Hershey Park, Maryland, even
Lancaster.
Philadelphia, Lancaster. It's just very centralized in location. And then we also get, college graduations, family get-togethers. People might be from out of state, but they have folks living in this area and they need a big house that accommodates everybody. It does well around the holidays, but even more so, like all the events that go on at,
Farm
the
show.
farm show complex, the Carlisle Fairgrounds. People are booking that to stay. And occasionally we get traveling workers. Like we just had guests the last couple weeks from the people building Costco up on the Pike. Their workers were staying at the property and needed, a residence while they were in the area. So looking at all that, looking at the income, putting together our numbers, what it was going to cost with, the financing and expenses that we would have in running it. We made a good offer and got it accepted, and it's been really good. Now, I tell people, anyone who comes to me who wants to buy an Airbnb or Verbo, I'm like, good luck. It like as good as it is, it's a colossal pain in the ace too. It's running a hotel, and there's a lot of upside, but it is more than a full-time job and a headache at times. But you just gotta juggle the risk reward on that one and see if it's worth it for you.
So you're absolutely right in one sense that for us, it's a lot of work. It's a five-bedroom home. Just to give you an idea of how investing in real estate can create passive income for you and appreciation, our $90,000 investment creates a gross income now on this property of $120,000 a year and probably nets us somewhere between $60,000 to $70,000 a year on that $90,000 investment. So looking for these opportunities out there are good, by again talking to agents. He heard that one through Brad Cleland. Kong heard his through Tom Chalednik. It's things that we have to do. On the flip side, Bill Anderson, which I said Elizabeth or Jean, this is the big one with my email yesterday versus today. Bill and Sherry invested a while back and bought a Airbnb on Longboat Key in Florida. And they bought that several years before they moved down to Florida. Now they handle their VRBO differently than we handle ours. Ours is more hands-on, where, yesterday Brooks and I were shuttling supplies over to this house with, toilet paper, paper towels, soaps, shampoos. Like Brooks said, we're running a hotel. Bill and Sherry own one in Longboat Key, and they have turned that one over to a management company. So, Bill, could you explain how you guys invested into your VRBO and how that's worked for you by using a management company versus more hands-on?
Like Brooks said, I mean, the first thing you got to do, I mean, we like the short-term rental just because of the higher income you can make on, nightly stays. I mean, you're at three, four, $500 a night. Um, excuse me. But the management company that we use actually managed this property before. So we were able to actually see what the rentals were and what kind of, income it was generating. Where we are at on Longboat Key, there are no more short-term rentals. They've grandfathered those properties that were short-term rentals that they continue to do that. So that's one of the biggest things you got to find out. Even though it's approved for a short-term rental, in Key West, for example, you have to have what they call a transient license attached to that property. So even though you're in this zone where you're allowed to do short-term rentals, if you don't have a transient license, you can't rent it. Now, there are properties that have two transient licenses. So then what they do is they lease them to other people in those zones. But back to ours. I mean, we use RVA. They charge us a 20% fee, off of the rental. Now we did a deal, and they're all negotiable. So we did a deal with them. We said, hey, okay, that's fine. But if we bring a rental in, we could do it ourselves. I mean, our contract says that you would let them book it. So we've been loyal to them, and we didn't want to cheat, and so on and so forth. So we only pay 15% then. And they pay all the taxes that need to go to Longboat Key. So we don't have to worry about any of that stuff. It's just we look at our calendar, okay, it's booked. We arrange for the cleaning people. They do have their own cleaning people. We didn't like the way they did things, so we had our own, and we just give them that schedule, say, hey, they're out, so on and so forth. So it's actually been pretty easy. Um, our season is sort of unique. When you guys are busy with the summer, the hot summer, we sort of get sporadic. Our season really picks up now through April, okay, because of the snowbirds. All right. They come in there and we'll get 2 week stays, 3 week stays. We have a person that checked in yesterday, they're there 9 days. So you just got to really, if you're going to do a short-term rental, you really got to do your homework and check everything out, check the HOA out, check because you could get a special assessment and it could set you back 30, $40,000. You know what I mean? If they need a new, from storm damage, things like that. We did get hit in the last hurricane. We had some water. We had about 7 inches of water. We found out that our unit is the highest unit in the whole community because we had the least amount of water. But by the time you do everything, fix everything, you spend 50, $60,000, and we're still waiting for the money, from the HOA. They're holding on to the money, which is, pain in the butt. But anyway, Sherry's about ready to kill him, if you can imagine. But it's like Brooks said, it's not just easy. You got to do it. I mean, we put advertisements. There's all kinds of Facebook pages, and actually, I bet we generate probably a dozen, reservations through the year that we don't even know the people. Morgan's mom had stayed there. We've had, other people from Harrisburg come down. Um, and it's only a one bedroom, one bath, full kitchen. You have a view of the bay and you have access to the beach because the property stretches across the whole island of Longboat Key, which is very, very, it's a unique place. Joy Daniels owns a place 4 blocks from us on the beach. So it's I like doing it. She's fed up with it. I like doing it. It's just she wants to sell it. I said, well, I'll buy your half then. So
So I know, Bill, like for instance, you guys put a post up and Regina shared it. And
yeah,
a result of Regina sharing it, one of
yeah,
her friend's mother from Tennessee or somewhere
yes, yeah. And I
leased it
actually
for,
met them. Yep, I met them. Yep, I was there actually with the storm. We still have some electrical issues, and the outdoor lights that are by the doors are tied to one unit that they're still working on. They have all the electric off. So I went and bought an LED D battery type light that goes on and off with motion. So my unit's safe. People can see to get in and out,
Mhm.
you know.
Yeah.
But
Now,
yeah,
how do
there's always something. You just run up the check on it, do touch ups. It's easier now that we're here. We have it in our personal name. There's some your best friend's your accountant. He's going to tell you he's going to know more than an attorney. I can guarantee you as to what you can write off, what you can do. If you're 75 miles or more, there's special rules. If you put it in your personal name, you can stay there 14 days. You can stay there as much as you want, but you can only rent it 14 days. If you put it as a second home and a rental, you can rent it all you want, except for if you want to go down, you can only go down 14 days a year. So it's that 14 flip-flopped. Everybody breaks that rule. But anyway,
when you originally bought it, what type of financing did you guys put on it?
actually, we used a girl in Harrisburg that did our financing. And I want to say we put about 100,000 down. And then we did a commercial loan, second home type loan. I think it was 6% is what it was.
Okay.
So, and like, yeah, I think Kong said, the value, I mean, we bought it for 355. Okay. It's probably worth probably 550 right now, I would think. And plus it's a business. If you can show that income, it's worth more than what the property is worth. It's worth more, if that's what somebody's going to use it for. And on Longboat Key, there is only 13 places, not residences, but resorts or whatever you want to call them, that can rent short term. Everything else is either 30, 60, 90, 3 times a year, or 6 months, or one time a year. So
Yep.
you really got to do your homework if you want to do short term rental.
So your $100,000 investment not only has created a nice passive income for you and Sherry, but it's also created this appreciation of a couple $100,000
Right.
in,
Right.
in what, a 3 or 4 year period of time? You've owned
We've
it
had
about
it a little over 4 years.
4 years.
Yeah.
Yep. Yep.
Yeah.
Good. Thank you. Yep.
Yeah.
Now, for those that are going to have a goal of getting into 2026, maybe investing into a rental property or a Airbnb or partnering with somebody, Brent, you know, there's when it comes to managing some of these, Brooks and I have you managing properties for us. Kong has you managing properties for us. Um, not every property is the same on what you charge, right? It's different depending upon what the property is, where it is, how many of them, how many units you have. You're managing a couple hundred units now. Is it something that you could help satisfy people's worries about owning an investment property by being able to buy it and then hand it off to you guys to handle? What's your spiel on how you can let them rest assured it'll be taken care of?
Yeah, absolutely. I mean, you said it about perfectly. We do not have a flat fee. So we can adjust and it is all different. Every property, as we all know, is different. In size, shape, form, and as an investment. So we don't have this is our fee period. We will absolutely work with you to make it work for you, the management. So please, if you have any questions of what the management would be, I'd be glad to talk to you and let how we can help you and take that worry off because, just kind of like Bill said, and Brooke said, it is a lot of work to manage and to make sure it is, it's running smoothly, but more importantly, to protect your investment. That's the goal is to protect it. So that's what we're here to help you with, and it is what would love to sit down and talk to you guys if you do have any questions.
And one of the things that I know that you guys do that's important is you're not only doing a credit check, you're doing a criminal background investigation, you're doing a verification of um, the tenant's previous landlords, employment verifications. What other type of things are you doing? And then the final say actually becomes the owner's say as to whether or not they want to rent it or not rent it. But normally these type of properties that we're renting are typically $1,000 plus per month. So the quality of the tenant that we're getting seems to be better because we're not really experiencing a tremendous amount of default, are we, with regards to properties?
No, not at all. And the types of properties that you're talking about, if it's $1,200, $1,400 and less, and this is the truth, it is a different clientele than somebody who can afford an 18 or 2,000 or $2,500 rental. It is just it's completely different. So, and the mentality of there is again just different of responsibilities. So we do absolutely in-depth background checks. We share everything with you, the owner, and ultimately it is your say, yes or no. If you want to meet them in person, we'll be glad to set that up. But ultimately, and we'll tell you what we, how we feel about that individual person and how it all checks out. So we'll lay it all out in front of you so you know exactly who is going to be in there. Absolutely.
Yep. Okay, good. The last thing before we wrap it up, Brooks, if you want to tell people about the Excel spreadsheet that we use that allows you to take your investment, plug it into the computer, and determine whether or not it's a positive cash flow. We have that. We're willing to share it with anybody that wants it and help them fill it out. And it's something we use a lot to plug the numbers in and make sure that it's going to work, right, Brooks?
Yeah, so it's a real quick way to plug in income, expenses, financing terms, that sort of thing, and it gives you the cap rate, which, is determined based on your income and expenses, but then it also gives you your cash on cash return. So whatever you're netting, according to the amount you're putting into the deal cash wise, it gives you a rate of return on that. So it's a great resource when you're looking at these investment properties to see if the numbers make sense. There's other stuff that's not measured on there, like appreciation and, tax deductions and that sort of thing that can certainly adjust your rates of return. But again, it's the first start for us. Anytime we're looking at a property, we plug these numbers in and, see if the return is where we want it. So we can certainly share it with you, and you can use it if you have any questions or you want me or Kong or my uncle to run you through how it works and how to kind of look at the numbers and see if something makes sense. reach out to us. We'd be happy to sit down with you and go over it one-on-one.
Luis, real quick, you and I met yesterday because you have a goal this year to buy some investment properties and start investing. We kind of did a recap with the call today based on the meeting that you and I had yesterday. This type of information have you pumped up and excited to get into this?
Absolutely. Listening from all the wisdom, Kong, Tom, you guys, and you're absolutely right. The key is in the purchase, like Tom said, and wealth comes from owning real estate. And we have that opportunity, so we have to take advantage of that. Thank you so much.
Yep, good, good.
Hey,
Hey,
Tim.
Tim, real
Yeah,
quick. Remember that one Facebook page is called the Short Term Shop. This is a girl. Her name is Avery Carl. She's actually an EXP broker. She just has agents, and all they do is sell rentals, short-term rentals all over the country. They do a lot of the homework. There's a lot of like just wisdom. Just if you have a question, you ask a question, they give you there'll be 30 people that give you an answer. Okay. And it's called the short-term shop, but she's been doing this. She started out with I think $8,000 and she has over 150 properties right now, doors
wow.
in a matter of 5, 6 years. So she's just smart, very smart what she did. But it's a lot of information on short-term rentals if that's the direction. She does both, but her business is driven on short-term rentals. And it's just a lot of information and what to look for and just beware type things, which is what you need because you
Yeah.
don't want to go in blinded. So
So the last thing I want to end with was some advice I got from a former real estate broker in the area. His name was Jim Twigg. He used to own Doherty and Twigg Real Estate. And he was good friends with Jim Grandin, the former owner of Jack Owen Real Estate. And he said to me a long time ago, Tim, buy single family homes. And I said, why is that? And he said, because when you go to sell them, you can sell them at a retail price versus a wholesale price. So if you're buying apartments or apartment buildings or things like that, typically when you go to sell them, you have to sell them to an investor who's going to make money off of those. So they're not going to overpay for it or pay pretty much a retail value depending upon where the rents are. So you have to sell, you're kind of limited on what you sell it to because the next investor is not going to put all this money out and not make any money. Whereas when you buy single family homes and you want to liquidate one to live off of this cash that you've accumulated over the years by owning these properties, when you sell it on a retail basis, you're going to get top dollar on these single family homes. So we kind of followed that guideline that Jim Twigg told us about, and it really helped my dad and I build a lot of wealth by buying one or two single family properties over the last 20 years per year. So if you're thinking about getting into the investment business, if you're thinking about trying to create passive income and look for that appreciation so that in 10 or 15 years from now, you have a pile of money, not just the commissions that you earned, but you have money from investing, run the deals past us. If you're thinking about the fact that, oh, I can't do this on my own, come talk to Kong, Brooks, myself, or anybody in the office, anybody that's on this call. Talk to them, find out whether or not they're interested in partnering with you on the deal and spread the risk like Tom was talking about. Share the risk, share the resources between the financial capitals that you both have, and share the work with it. So the bottom line is this, is we have first look at a lot of deals. Take advantage of looking at every opportunity for yourself first, with a partner second, and listing it third. Other than that, anybody have anything they'd like to add to this call?
One last thing, Tim.
Yeah.
Don't be afraid when you hear about a new neighborhood coming up, specifically a townhome neighborhood. don't be afraid to approach the builder and see if they would be willing to sell the model home to you, and then they can rent it back. I know it sounds kind of weird, but the reason is, and I just bought my a rental last year based on this. The builder can't start another building until the whole thing is sold out. So if they still have a model home, technically it's not sold out, so they can't start another building. So if you approach them and figure out a number that works for both of you, you can make it happen and have somebody rent back from you for 2 months or 2 years until the project is done. And you have a rental that is appreciating as the neighborhood gets near completion.
Yeah, thanks for bringing that up because you're absolutely right. When Poppy and I were building the townhouses, we couldn't go to the next phase to start the next phase until we had 65% of the ones that we owned either rented or sold. So 65% was our number with the bank that we had to meet in order to go to the next building or the next phase. So that's a good idea. In fact, Brent, you just had a client too that just purchased how many townhomes that you're going to be renting from a brand new community?
Yeah, he purchased 6 already, and he has a contract in, and they're building a total of 18 more. So it's going to be a total of 24 units.
That one owner is going to own and you're going to manage of brand new townhomes from a builder.
Mhm.
Yep. And, I'm sure they're not going to cash flow significantly at this point in time, but the appreciation that you're going to get or he's going to get over time will be very significant.
And the write-offs.
Yep. Because these homes are not going to get cheaper. They're only going to get more expensive. So again, thank you for everybody who participated in the call. Hopefully you got something out of it, and see you next week.